Welcome back to the EMEA CX Breakroom. I'm your host, Kim Johal. Today we're talking about something that looks simple on the surface, but it's more complex behind the scenes. That's messaging. When a customer sends a message, what actually happens next? And why does that matter for trust, control, privacy, resilience, and CX? I'm pleased to be joined by Andro Galinovic, Infobip Chief Information Security Officer. Welcome, Andro.
Nice to be here. Thank you for having me.
And Imraan Kharwa, Infobip's Regional Data Protection Officer. Welcome, Imraan.
Thank you, Kim. Happy to be here as well.
This is not a technical deep dive. It's a conversation about the hidden chain behind the messaging, the systems, the providers, and the responsibilities that sit between the customer and the final outcome. So let's get started. Andro, what is the most common misconception clients have about security on messaging?
I don't know if I would call it misconception or maybe just not common knowledge, and that's frustrating for many, especially nowadays where third-party supply chain issues have become such important topics. To explain how this works, so just like the word internet comes from basically the term of interconnected networks, meaning that there is not one single well-controlled, well-governed network that spans the entire globe, but it's rather an interconnected piece of over, I think, 80,000 different individually governed and controlled networks. Our telephone and thus SMS ecosystem is also a collection of over 4,500 interconnected mobile operators worldwide. And why is that? This is because no one entity can basically span the entire globe and have direct connections to every corner of the world. The other similarity between these two networks is the fault-tolerant nature and design, which ensures connectivity as the prerequisite for this to work. And this is why in both networks, you have dynamic routing protocols that will ensure delivery. And this is why two consecutive transmissions might actually use different paths to traverse the network. This means that in the terms of supply chain, this supply chain can be potentially very long and changing. And to state the obvious from my side, a security perspective, the shorter the path, the more direct the path, it's safer and probably faster too. But from a resilience perspective, limiting yourself to like one direct path, in theory, is more prone to network outages. So it's very important to understand and be in a position to choose the right solution for the right use case and understand this underlying architecture of the world of connectivity.
Thank you, Andro. That's really insightful, and it shows obviously the complexity behind it all that a lot of people don't actually realize. So moving on, Imraan, when does that misconception matter most from a privacy or governance point of view?
Yeah, that's a great question, Kim. So from a data privacy perspective, it's important to recognize that while the messaging chain seems to be a seamless interaction that happens between different parties, there are various systems, processes, operators, networks, third parties, who all form part of this link that causes the messaging to be effective. And as a part of that, that's underpinned by an entire regulatory regime that organizations need to be aware of, need to be compliant with, and need to ensure that they stay out of the ire of regulators when dealing with. So that's an entire layer beneath the usual considerations that individuals would have.
And then a question for both of you. When does the hidden complexity behind the message become more visible, for example, in procurement and audit, or when something goes wrong?
There are definitely various touch points at which that becomes prevalent. The first point being at the point of procurement. Organizations must ensure that they carry out robust vendor assessments, that they need to sign adequate agreements to ensure that they meet the standard that the regulatory regime or the regulatory framework that is applicable to them requires of them within whichever jurisdiction that they are in, right? An example of that would be, third-party risk assessments that would be carried out at the procurement stage. You would also have to ensure that the partners and operators that you are engaging with have the same or similar security standards. You have to make sure that they match your privacy posture as well. And that would be signing data processing agreements. The data controller, which is most often the client in this case, would have to ensure that they sign transfer agreements in the event that the data is going to be sent across borders. They would also have to ensure that they carry out data processing impact assessments where necessary. But that is a determination that they have to make at the onset or where necessary from their perspective.
It's the foundations that you need to get right. And this is the starting principle for any successful engagement piece there. I've got a sequence of additional questions, which I'm going to share with both of you. What changes when you need to explain the path in the middle of an incident or an audit or a customer complaint?
Well, as Imran explained, so because this chain is sometimes long in difference from different channels. So SMS can be a longer chain, OTT channels like WhatsApp. So rich messaging channels have by default very short chains because you connect directly to that platform owner and operator. You have to kind of know that. And then if case something does happen, God forbid, you have to understand that in this chain, basically, as the privacy experts would say, each of these hubs is basically their own controller, which means they're the ones obligated to respond and notify in case something does happen. And because of this dynamic nature of the network, you might not know upfront the entire chain to assess in some cases even, but you will actually find out the chain once in case of an incident, they start reporting up the chain and explaining something has happened. So this is something which is very puzzling for many organizations which are now trying to understand the supply chain. A lot of banking industry has, well, in European, they have the DORA directive where they have to understand the chain. And for static chains, for like SaaS applications, this is very simple usually. But for messaging, this can be complex. So the whole market needs to adopt, I would say, good practices for reporting and being compliant and security practices because of this complexity of the entire chain.
Thank you, Andro. I mean, that really ties into actually what we hear. People just assume it's as simple as they send and it gets delivered. They don't actually see the complexity behind it. So really good point. So how do you balance the desire for a more direct path with the need for reliability and resilience?
Well, from a security perspective, as I already said, the more direct the path, the safer it is, basically. And thus, direct connections or many of these rich messaging channels, OTT channels, as we call them, like WhatsApp, Apple Messaging, Viber, they're basically better for security reasons in that sense. But that doesn't not matter. That doesn't mean that SMS and longer chains are bad or should not be used. It depends on the use case. For instance, if a bank is sending me a full transaction information in an SMS, then I would require more security and I want a shorter path. I want a direct connection. If they're sending me a link, which I can only open after authenticating with some means or opening it through an app, which also authenticates me, then majority of these risks are mitigated. So it very much depends on the use case, what is actually better. Do you optimize for security or do you optimize for delivery? And do you optimize by platform which can provide you the most adoption and penetration on the market? Because everybody has SMS, not everybody has, for instance, WhatsApp. This is why RCS now is coming into play a lot because it is supported by so many different telecom operators and phones, and it has the potential to replace many of the OTT channels because it's widely adopted and it's basically a rich messaging format. But this is something that we want our customers to understand, and we want to have these kind of conversations with them to understand what's the best channel for each use case. Because if they just optimize for cost, which is usually how tenders work, usually you get up with the lowest cost but the least amount of security.
Yeah, no, I totally agreed. And the richer messaging channels are making a big shift because a lot of security and validation is done within the app. But if the trust isn't to click the link, then it causes friction in the overall journey, which is why these verified channels are making the change. So what is the common mistake most organizations make when they try to oversimplify the messaging chain?
The more operators that you have in the chain, the greater the risk. The more data that you intend to collect or to share, the higher the risk, right? From a data privacy perspective, the more sensitive the content that you are sharing, the more you have to implement privacy and security controls. So data privacy laws delineate between general information, which is contact information, addresses, telephone numbers, that sort of thing, and sensitive personal information. And when it comes to sensitive personal information, there is a higher standard and a higher bar that you need to meet in order to make sure that you comply from a data privacy perspective. So, there are more points of failure the longer the chain is, as Andro mentioned, and the more complex it is, the more due diligence you need to perform on your side to ensure that you remain compliant.
Andro, you touched on this earlier. What do organizations often overlook when they only focus on price?
When they only look at price, then what happens is you get what you pay for. You get the cheapest offer, and in many regions, the price is even fixed by the mobile operators. But you can see even practice of very aggressive pricing in some regions where the price is lower than that which is set by the mobile operator, which begs the question how this is accomplished. This is definitely impacting the security of delivery of those messages for one or the other reasons. So you should not, especially if you care about security and privacy, just optimize for cost, because then you are not putting interest of your clients as number one priority. So I would always eager customers to not just ask for price, but to explain the use cases. In some cases, the cheapest solution might be good, but in most cases, you want to understand what you're paying for and what are the hidden costs potentially of a very low cost route or messaging.
Quality over quantity definitely sounds like the route I'd follow. Imraan, when you look at the MENA region, what are the main governance or data handling questions BFSI organizations are asking, and why that may differ from Europe?
Yeah, it's very important to understand the environment that we operate in when it comes to MENA. The MENA region has a regulatory regime that is far less mature than that in Europe. As a standout, Europe has had the GDPR, which is the General Data Protection Regulation, for about 8 years now. So the environment is pretty mature. The regulators have developed a body of knowledge and a body of work with regard to enforcement that has been around for about 8 years. Whereas in MENA at the moment, data privacy is still fairly in its infancy, right? So we've got laws that have just come out in the course of the last 2 years. We've got regulators that are still developing legislation to this day and regulations. What's happening is they're still in the teething phase. We're seeing updates, we're seeing changes, we're seeing alignment with the GDPR, which is broadly considered the global gold standard. What tends to happen is European legislation tends to filter down eventually, and there is still a significant amount of latency between what's happening in Europe and what the MENA region is currently implementing. So you'll see, for example, in countries like Saudi Arabia and the UAE, the offices have been set up of the data commissioners, but they're still actively developing new regulations to address things like AI, to address things like cross-border data transfers, to address localization concerns, to understand the way systems and processes actually work, in a cloud environment. So that's currently happening. And that latency extends to a lot of the legacy thinking that is still available in the market. We're seeing, concerns from clients about strict data storage in certain countries when that status quo has long changed. The status quo, for example, in Turkey has changed. In Saudi Arabia, it's changed. But that change happened 1 or 2 years ago, and the market has yet to catch up with that change to understand the new developments. So the regulators have published mechanisms that you can use to transfer data out of the country. They have provided advisory notes. They've provided guidelines. They've created avenues by which you can use external transfer mechanisms. But the marketplace has not yet caught up to that. We're seeing that challenge on a daily basis. We tend to get into engagements with clients where they still need to get up to speed with these new requirements. The challenge is there, but we're seeing the market starting to adapt to it at the moment. The big concerns we're seeing are around data localization. We're seeing regulatory alignment where the regulators have very bespoke requirements like registering with the local regulator, payment of certain fees that need to be done, registering your operations with the regulator in the event that you carry out certain high-risk processing activities. That sort of thing is still in abeyance at the moment. It's still being developed, and we're seeing a lot of movement in that space at the moment.
I've got a couple of open questions. What happens when a market has a local or regional option for one part of the journey, but not for the other?
Yeah, that's a good question. As you can imagine, SMS is the baseline for many, including us. So we offer SMS in all regions where we do business and have data centers. And yes, in some countries or regions, some other channels or product might not yet be available, either due to we don't still have infrastructure there, or the channel vendor isn't present there and you cannot connect directly, and they don't have resilience there. So there is always an option that the customer can use the closest data center in the neighboring country or region if it's not specifically regulated and limited for that use case. But this, again, the conversation that we want to have with our customers to understand the use case, because not all use cases are equally regulated. What we do at time of this recording, we have over 60 data centers globally in 6 different countries. And this is precisely because as we grow the business, we grow our infrastructure in the same way, because we want to provide this regional presence and local data residency for our customers in those countries. We basically build one new data center each year at least. So we tend to put infrastructure in place where the customer needs it. So we had a large investments in the Middle East and the Gulf region recently, where we have everything in place in multiple countries to offer the whole palette of products, including AI-empowered solutions. If some country is missing, it's very easy just to connect to a neighboring country if it's permitted. And this, again, the conversation that we want to have with our customers.
This is really powerful, and actually it's underestimated the value it brings. So how should BFSI teams think about cross-border transfers when the business wants a simple customer experience, but the infrastructure really differs from country to country? And I guess that leans on to your last answer as well, Andro.
This is an important consideration that all of our clients have with us very early on in the engagement. So depending on the client, depending on the jurisdiction that they find themselves in, the applicable regulatory regime that oversees that, they need to determine what their requirements are, what is the most cost-effective, most efficient way for them to do this, and whether they have the appetite for it. So a lot of these transfers are permissible as long as you have the correct controls in place. And we are able to assist our clients by implementing the right controls, ensuring we have contractual mechanisms in place with them to address any concerns that they have, to ensure that we address specific privacy and security concerns that they have. We have a suite of data privacy and security certificates that we've achieved. A very common misconception around this is clients will ask if you are compliant with the data protection law in a particular country. Now, it's not possible to have that because that's a moving target, right? It's not possible to say you're 100% compliant. Compliance is necessarily a moving target. What you've got to do is you've got to find measurable industry standards that you can certify to demonstrate that you've achieved a certain level of compliance. And this is important because one of the underpinnings of every data privacy law is that you have adequate, reasonable, organizational, and technical measures to protect personal data. And that's specifically vague because what's adequate and reasonable today will not be adequate and reasonable tomorrow. You would know that technology moves at a really rapid pace with the rise of AI, with the rise of different encryption standards. You've got to make sure that it's adequate and reasonable at every point in your journey. So it's not possible, firstly, for you to be 100% compliant. That doesn't exist. What you can do is you can establish a baseline set of standards that you certify to. Then you can have industry experts come in and audit you and issue you a certificate. And you can do that on an ongoing basis to demonstrate your compliance with those standards.
One also thing that I would like to add is that there are customers and companies that we work with which are actually actively working to expand their business cross-border that already function in multiple countries. Their cross-border transfers is not something bad to be frowned upon. They need to connect to multiple regions. So they utilize the fact that we have data centers in different countries, and they can either use a single point or they can use multiple data centers in different regions to localize for each country. So in some cases, you do these cross transfers by design because that is where your customer base sits.
Perfect. And the point around the data centers shows it's a real strategic decision. Andro, how should BFSI leaders think about AI-powered responses when the underlying hosting or data setup is not the same in every market?
First of all, they should definitely consider this as an option, even though with these localization potential issues, because we offer fully localized AI powered products to many markets, and we utilize hyperscaler for large language models. Just recently, we did this in the Gulf region, and because of different availability of different hyperscalers in different countries, we use different hyperscalers for larger language models, but we basically offer at least one option. In some regions, this might not be possible. So the fallback is always to use capabilities of, let's say, a neighboring region or neighboring country, if not particularly regulated. But also, we have the ability to bring your own AI, bring your own LLM. And I can speak from our internal experience, how we utilize AI. So we have a combination of cloud-hosted large language models in multiple regions, but we also augment this with self-hosted LLMs in our HQ. So we basically pick and choose what to use in which case. So the customer has basically the same option if they want to. If they want more control, they're perfectly fine in bringing their own LLM to the table.
And when a market does not have a local option, what is the simplest way to think about fallback models? You touched on this earlier with the neighboring regions, but is there any more detail you want to share around that?
In many countries, you have an option and you can utilize the local option. If not there, maybe it's coming very soon to a region near you. But in some cases, as I said, the use case might be suitable for using a neighboring region or country. If not, then you choose maybe a combination of the channels to create an experience which is still good for your customer. So it really depends on each business need of the customer. But we do have an extremely large data set of options. So different products, different channels, different regions. So we usually can find an option that fits the needs of the customer.
Imraan, last question. Does data residency slow down AI adoption, or do clear rules actually make it easier to move with confidence?
I don't think it necessarily slows down AI adoption. It just, requires that organizations think a little more carefully about how they want to address it and how they want to approach it. This is based on their own risk tolerances, the regulatory frameworks that are applicable to them. Cost is also a factor as well that they might consider. But I don't think it slows it down. I think it definitely goes a long way to defining and allowing them to understand better what the constraints that they are working within. And once they understand those constraints, they can obviously make that determination.
I would add that, as Iran said before, some countries are more ahead with regulations. Some are looking smartly to see what others will define and then basically adopt that. But from what we have seen, all of these regulations attempt to solve the basic problems to ensure protection of fundamental and well-known human rights, enforce transparency, accountability, fairness, not include biases, try to mitigate this risk. And I don't see any other regulation, new one, not adopting these principles. So basically, these are principles you can already follow now, and you are basically future-proof for new regulations to come. And yes, right now we have uncertainty, just like we had uncertainty with cloud and even machine learning back in the day. And I remember conversations within the banking industry when machine learning was, let's say, a new thing. The same conversation that we have now today. Banking authorities are not against these technologies. They just want you to be in control. If you're using, let's say, for credit scoring, machine learning system, they want you to understand how this is done. They want you to be accountable for the outcomes and the results this system generates. We did not call it human in the loop back then, but it's actually the same principle, which applies today. You will have to be accountable for the technologies, and then probably no regulator will have an issue with using technology.
Right, guys, the thread running through this conversation is that messaging is never quite as simple as it looks. Behind every message is a chain of systems and responsibilities. And that chain affects the trust, the privacy, the resilience, and the customer experience. What also comes through is that Europe gives us a useful baseline, while MENA shows us how quick the practical setup can be by varying by market and service. The common challenge is simple to say, but hard to execute. How do you keep the customer journey clear while making sure the operating model behind it is understood and controlled? Andro, Imraan, thank you very much for your valuable insights. If there's one clear message for the audience, it is that the hidden chain behind the messaging is part of how trust is built, not just how messaging gets delivered. Thank you very much for listening in. Until the next episode.